Wirecard Bank, Difficult Times and Global Aspirations, 2006 to 2010. By 2006, the world had recovered from the tech bubble. Wirecard was traded at around €4 per share on the tech DAX, the successor to the newer market, with a market cap of €300 million. As the online gambling industry grew, so did Wirecard. They reported a revenue of over €81 million. How was Wirecard reporting this type of revenue and showing growth at this time? As a publicly traded company, Wirecard needed to increase sales and volume of its payment processing transactions. Online gambling and pornography transactions were high, but they still had to deal with the issue of Wirecard or Visa discovering the nature of these transactions. So Wirecard's next step? Business combinations. Buy distressed companies that legitimize their business model and help them avoid a third-party review of their transactions. This will be a recurring theme with Wirecard going forward. One of the company's most critical purchases took place in 2006. The purchase of XCOM. In 2006, under the direction of CEO Marcus Braun, Wirecard purchased a small online bank called XCOM for €18 million. Not much was known about the small German bank. The important part was that it held a banking license. XCOM was consolidated into Wirecard and renamed Wirecard Bank. And just like how Wirecard became a public company by using another listed company as a gateway, Wirecard obtained a banking license by purchasing XCOM and thus again avoided the scrutiny and review that would have occurred if Wirecard had applied for one themselves. So what's the value in Wirecard now having a banking license through its purchase of XCOM, now called Wirecard Bank? Well, there's a big one. As a result of its banking license, Wirecard, the parent company, could now issue credit cards and process credit card payments for its merchants. And those merchants could also hold bank accounts at Wirecard Bank. Wirecard, with Wirecard Bank, was now technically a financial technology company, which is defined as a financial services company that utilizes state-of-the-art technology to broaden and enhance the range of services it provides to its customers. Vertically integrating the issuance of credit cards and processing their transaction into bank accounts held at their own bank in and of itself was not a problem. Many banks do it properly, if their internal controls are effective and oversight is in place. We will discuss internal controls in another episode. For Wirecard, it was doubtful that anything close to what you would call effective internal controls was in place, and this arrangement created many opportunities for fraudulent activities. It also created an automatic payment approval process for MasterCard and Visa, as accredited banks did not need to submit supporting documentation for transactions. In short, as a bank, MasterCard and Visa did not review transactions or merchant IDs, and this significantly reduced the chance of the fraud being discovered at Wirecard, but also, and as importantly, allowed Wirecard to now freely increase its volume of transactions and revenue with high-risk merchants. Let's walk through an example of how Wirecard could have committed fraud using Wirecard Bank. Banks often have reserved funds for payments from high-risk merchants in case of chargebacks where a customer requests a refund because of unsatisfactory service. So a merchant does not always immediately receive the full payment from a sale into their bank account. In cases where the payment processor and the merchant's banks are separate entities, or where a bank that handles both has proper internal controls in place, the payment processor can verify with the bank that the money held back is properly set aside for the reserve fund. In Wirecard's case, because they handle both the banking side and the processor side, they never had this check in place. To give you a simple example, Wirecard, the bank, can establish a 20% reserve fund policy where 20% of all transactions from a risky merchant are held back for the reserve fund. And Wirecard, the payment processor, can inform the merchant that 20% are indeed held back for the reserve fund. But in reality, Wirecard only deposits 10% into the reserve fund. The rest are gone to wherever Wirecard feels like it can go to. It can go to cash to inflate liquidity. It can create phantom revenue by going to sales, or it can cover expenses. This lack of checks and balances between the bank and the payment processor allowed Wirecard to create a lot of opportunities to continue concealing their revenue sources and also show the public that they were increasing sales and volume. Of note, at this time in 2006, there was no concern in the public about Wirecard. It was seen as a homegrown German fintech success that was trending upwards on the tech DAX. 2006 to 2007, Unlawful Internet Gambling Enforcement Act. Between 2006 and 2008, Wirecard's financials showed growth in revenue and valuation. The revenue rose 63% in 2007 and almost doubled in their profits. They bought a competitor by the name of G2Pay for 48 million euro, and their share price went up to 11 euro with a market cap of close to 1 billion euro by 2008. However, a number of events took place that increasingly made the operation of the rapidly growing Wirecard more difficult. The first event was in 2006 with the passing of the Unlawful Internet Gambling Enforcement Act, which made the financial transactions in online gambling illegal in the US. Paul Bauer, who was still serving as a member of the board, sold all his remaining shares of Wirecard in late 2007. This sale by Paul showed that he had little faith in Wirecard as a legitimate and growing business. Now, he was wrong about this, as Wirecard would continue to grow over the next 10 plus years. But he was right about the legitimacy part. The way Wirecard got around the law was to argue that poker is a game of skill. Games of skill were specifically exempt from the Unlawful Internet Gambling Enforcement Act. So poker belonged in this gray area. It was risky. Wirecard, being a risk-taking company, to say the least, continued to operate as before. 2008. During the annual shareholder meeting in the summer of 2008, a shareholder association questioned Wirecard executives why a large portion of the company's revenue had come from Gibraltar, why there are business unit in the British Virgin Islands. CEO Marcus Braun and CFO Burkhard Ley were unable to provide satisfactory answers. As a result, Wirecard's share price plunged almost 50% to €6.20. A few days later, Braun launched a public relations campaign against short sellers, claiming they were responsible for spreading false information to crash Wirecard stocks and cash in on the short. The really strange thing was what happened next. BaFin, the Federal Financial Supervisory Authority, the German version of the Securities and Exchange Commission, took Wirecard's side and launched an investigation into market manipulation. Wirecard did their own investigation and targeted 2 short sellers who were also part of that shareholder association that questioned the executives, specifically Marcus Braun, about Gibraltar and the British Virgin Islands. These short sellers were named Tobias Bosler and Marcus Stroop. Tobias Bosler, in particular, started shorting Wirecard stocks after discovering some irregularities on their financial statements. Wirecard was very profitable during the first quarter of 2008, but somehow they had a cash flow of negative 22 million euros. He then told Straub about it, and they both shorted the stock. What I'm about to tell you will sound like something you would see in a Martin Scorsese film, my favorite being Goodfellas. 2 very intimidating looking Turkish boxers and Wirecard's lawyer showed up at Bosler's office and physically threatened him. Bosler closed out his short positions shortly after that incident. A few years later, Bosler and Straub were convicted of stock trading activities unrelated to Wirecard. This allowed Wirecard to paint the both of them as financial criminals and gave the public and the authorities more credence in siding with Wirecard in the future. BaFin siding with Wirecard will be a recurring event as this story unfolds. 2009. 2009 was a pivotal year for Wirecard. The financial crisis that started in late 2008 plunged the global economy into a long and deep recession. Many people around the world lost their jobs and their homes and had to cut back on their discretionary spending. As the company made it through the issues with the short sellers, more troubles found their way to Wirecard, whose share price by then had dropped to €4, with a market cap of €325 million. The payment processing company that Wirecard had acquired 2 years earlier, G2Pay, was losing customers. G2Pay's sales were a significant part of Wirecard's overall revenue, so this was very concerning. To make matters worse, Rüdiger Trotman, Wirecard's COO from 2005, left the company to join a new payment processor called Initech, where G2Pay's clients had been flocking to. The talkative and outgoing Trotman had been Wirecard's biggest salesperson. Given an environment with proposed tightening of online gambling regulations, the ongoing financial crisis, and the proliferation of free adult content on the internet, Wirecard should have been very cautious with their formal financial projections, known as company-issued guidance. Company-issued guidance is a set of projections management and shareholders take very seriously. Yet in 2009, Wirecard executives presented their investors with a linear, continuous growth projection, which was, in hindsight, difficult to understand given the problems we just described. The person providing these overly optimistic projections? Jan Marsalek. Jan Marsalek was the young computer programmer who almost blew up the company system by suspiciously routing all of their network traffic to his own computer. He also failed to deliver on a new software system that he had promised in 2002. He was probably someone that a credible company should not fully trust with vital responsibilities. Yet, in 2009, Markus Braun chose Marsalek to replace the experienced Rüdiger Trotman as the company's leading salesperson. Crucially, at this very moment, Wirecard faced multiple headwinds. As the financial crisis spread worldwide, users were not just canceling, but asking for refunds on their subscriptions. Refunds led to chargebacks against Wirecard. As customers asked for refunds, MasterCard and Visa paid more attention to the businesses their customers were canceling from. In our case of Wirecard, online gambling and adult content, which MasterCard and Visa considered high risk. To increase sales and support future projections, Jan Marsalek, against more experienced opinions, agreed to take on high-risk clients. One example was a Canadian entrepreneur named Jesse Wilms, whose questionable business practices in the past had already gotten him sued by Microsoft. Taking on Wilms' acai business only got Wirecard into more chargebacks and more scrutiny from Visa. We'll talk about this in another episode. In 2010, Markus Braun promoted Marsalek to Chief Operating Officer. There'll be plenty more of Jan Marsalek in our story. The question that we asked ourselves in researching this podcast is why the faith in Jan Marsalek? From what we can tell, Marsalek was extremely charismatic and persuasive, while Braun was more of a technical person. So personality-wise, you can imagine them working really well together. Another factor might be that they were both Austrians from Vienna, and they easily formed a younger, older brother relationship. This personal and professional relationship would continue to the bitter end of our Wirecard story. However, the bitter end was far from near, as Wirecard continued to climb to heights that were unfathomable given the fraud, deception, and unethical behavior that we have described so far. So if you're ready for more unbelievable growth from this company, given what you know already, well, stay tuned to our next episode.